The opinions and recommendations expressed by Dan are his own and do not necessarily represent the opinions of this station or any of the show's sponsors.
All the major indices in negative territory right now. The Dow's down 45. That's where we are right now anyway. We know that's going to change. European stocks are way off their multi-year high, so they continue to go down. U.S. wholesale prices surge in April is the headline. Again, I talked about this with the PPI index. The wholesale prices are surging. Guess what? It will get to the retail sector, and the retail sector means inflation, and the retail sector means less money that we are going to have on discretionary spending, because some of the things that we need, not things that we want, but some of the things we need are going to increase in price. Is this the beginning? You know, people have asked me, and I got this question a couple times last night, people saying, hey, look, when am I going to know? When am I going to know that it is coming? When we see inflation begin to pick up, that is going to be our first sign to go into Panicsville. And when we see that, then I will be talking about it. Keep listening to the program. We constantly get some, you know, you gotta understand we're on here every day, and you know, we answer so many questions. I can't expect everybody to listen to the program every day. That's hard to do. But at the same time, you can check the archives or you know, and find out that what we're saying about specific things, and look at the YouTube videos and other things. But I will say this, inflation, you will start hearing me change my attitude about our cash position and about whether we should be in or out of the market based on inflation. So we need to watch that headline, I guess, carefully. And that will, by the way, impact markets. Let me just give you an example of something that we've got to understand about inflation. Inflation's going to raise the 10-year bond yield up in all likelihood. We are at a place right now in this country that the government spends about $335 billion a year on interest on the incredible debt that we have, $335 billion a year. If we get interest rates anywhere near normalized, or interest rates start going up, the $335 billion in interest could go to $1 trillion in a heartbeat. And that is going to have a devastating impact. We heard Janet Yellen last week say, we played the clip of it, saying that the debt is unsustainable. Long-term debt is unsustainable. Think about adding $1 trillion of interest to it if you think it's unsustainable now. So major issues, and inflation is extremely important, and we'll watch it closely. Let me go to Carol. Carol calling us from Pennsylvania. Hi, Carol.
Hi, Dan. How are you?
I'm good.
Good. I have a question. My father passed in '92. I'm 62 yesterday, as a matter of fact. And I had a home. He left me with a little hole in the wall. I lived in it for a while, and then I moved out, and I moved in the suburbs. Then a girlfriend of mine, she purchased it from me, you know, she was a friend of mine, so it was like family. It was almost like a giveaway. But when my dad died, you know how you registered the will.
Yes.
And but the title, I never had a deed in my name. When I register will, shouldn't they put the deed in my name?
No, they won't necessarily do that. So when you register the will, and the will is closed out, in other words, the will, all the stipulations in the will have been fulfilled, you get something that's called a short certificate. Do you see anything?
I didn't get that. They never gave me that.
Okay. Well, you need that. You need to get a short certificate. And what you need to do is go to your county, the county in which you live, and you go to the Register of Wills office. They have a Register of Wills office. And you tell them that, hey, you know, my dad died many years ago, and I need a short certificate for the will. And they'll tell you what you need to do to get that. It's not something that's going to cost you a lot of money or anything like that. It may, you may have to do a little bit of paperwork. I don't think it's anything that's going to be monumental. It shouldn't be. and you'll get a short certificate. Well, now a short certificate is you get more than one. You get as many as you want. So let's say, you might say, well, I want 10 of them because you want to make sure that, he might have had a mutual fund or he might have had a house or whatever it was. They're kind of like a death certificate. You're going to need the short certificate to satisfy that. So that's where you have to start. You have to start at the county.
Certificate?
Short certificate, it's called, and they'll know what that is when you say that. And so it's not. In other words, it's going to say. Not the short certificate's not going to say this, but by presenting the short certificate, it is saying that the deed is in your name by way of the will, that you were left this in the will. The will is in your name, and you're able to sell it like like you would if the deed were in your name.
Oh, so it's a short certificate.
Short, no, SHORT.
Oh, a short certificate. Okay.
Yes.
But I didn't register in the county I live now. I registered when I was in Philly.
Well, that doesn't matter. You mean the will?
Yeah.
Was registered in Philly. Well, then you got to go to Philly. Did your dad live in the city?
Yes.
Yeah. So you got to go to the recorder of deeds in the city then, not in the county that you live now.
Where I registered the will, I have to go back there.
Correct.
And ask for a short certificate. Okay.
Yes. Okay. And that'll help you out. Okay.
Thank you. God bless you. All right. Bye-bye.
You're welcome, Carol. Thank you for that. Let me go to Julia from North Carolina.
Hi, Dan.
Hi, Julia.
Thanks for
How are you?
everything you do for all of us. I have a question. I have an IRA account, and my investor has sent me a bunch of paperwork and would like me to change my account over to what is called a Freedom Investment account.
Uh-huh.
And I just feel real trepidatious about this. I looked it over. I had one of my relatives look it over and said there's a lot of fees involved in this. And it's explained as a high, what they've got me profiled as is for high-income mutual funds.
Mm-hmm.
I'm retired. Go ahead.
Go ahead, Julie. How old are you?
Okay.
That's what I was going to ask.
I am 67. I'm retired, and I draw from my IRA account every month.
Mm-hmm.
And frankly, I'm just not.
Okay.
I'm just not happy with the whole situation. I feel like I'm being forced into something I don't want to do.
Yeah. Well, don't do it, and you can't be forced into it. It's your money. Keep that in mind. So, irregardless of what they think you ought to do. I don't know what it is, but I'm suspecting that it might be an annuity or something like that. Do you know what your money is in right now? What kind of fund it's in or anything like that? Do you know what that is?
I have an asset allocation analysis in front of me.
Okay.
It's an IRA, and there's the different things that I can tell you if you would like that information.
Yeah, tell me a couple of them.
Okay, fixed income is 53%.
Okay, hold on, Julie. Does it give you a name of a fund? Like, so the majority of your money is in fixed income, but what I'd like to know is what is the fixed income fund or account that you're in?
Okay.
So there's a list of things like X, Y, Z.
I have a big list of things. Yes.
Okay.
I've got,
can you give me one of them in the fixed income area?
Okay. I'm not sure. It's like mutual open-end funds or closed-end funds is how it's listed.
Okay. Give me one of the. Just give me two of the mutual funds. That's all I need because I'm just trying to figure something out. Go ahead.
That would be closed-end?
No, open-end.
Okay. Federated Strategic Value Dividend Fund Class and Goldman Sachs.
Okay.
Okay.
So, that's good. So I'm just trying to make sure that you've got a series of mutual funds in there, which it sounds like you do, and it's not a part of an annuity. Federated oftentimes is part of an annuity, but Goldman is very seldom, so I suspect that it's not. And I don't know what Freedom, I don't know what it is they're suggesting. It sounds like it could be an annuity product, and I would rather you not do that. One of the things that if you're drawing from it every single month, you need to make sure that you have it set up in such a way that you're not going to outlive your money, because obviously it is decreasing every month by by a certain amount. And what I would be concerned, if you're in good health, you're still young. When we look at statistically how long you could live, and the last thing you want to do is try to be drawing out more money than the account is earning on a regular basis.
Yeah. Right.
And if you have three,
what's happening, Carl.
Yeah, that's what's happening, and that's not a good thing. Here's what I'd like you to do, Julie, because I can't do this over the phone, at least on the air. And what I'd like you to do is, I think you need to call. If you would call the AFA Foundation, and you would tell them that you talked to me over the air, and I suggested that you call them, and just call the 800 number. You'll hear it here at the break if you don't have it, but put in extension 233 when the line picks up, and just let them, leave a message if you don't get somebody, and just say, I was talking to Dan, and I need to have a conversation about my income stream from my IRA. And that will help me, and either someone will get to you. The number is 800-326-4543, 800-326-4543, extension 233, and you can call there and just let them know, and we'll get back to you. Somebody will get back to you. I'll talk to you, or somebody along with me will talk to you, and we'll try to get a feel, and I'll see. We can set something up. I mean, I just need more detail, but I can give you some guidance, because I don't want you to do the wrong thing. So don't worry about the pressure they're giving you. If they call you again, say, look, I don't want to do anything right now. Leave everything just the way it is, and leave it at that. And make sure you let them know that. So don't sign anything that you get in the mail, even if it's something that looks totally unrelated to this. Don't sign anything, and we'll talk about it.
All right. Thank you so much. I really appreciate it, and I will certainly get on that.
Great.
Get the,
well, thank you. Thank you. I'm glad you called, Julia. Because I love it when people call before they do something. When we, I can be of some help to them and give them some guidance. Oftentimes people call after they've done it, and there's little we can do. So I'm really glad you were thinking about that, and I'm glad that you knew about financial issues and are able to call. So thank you so much for that. I think that's going to be helpful to you. So I'll expect to hear from you. Thank you, Julie. I sure appreciate it. 866-300-9298. Let me go to Deborah. Deborah calling us from Michigan. Hi, Deborah.
Hi, Dan. Thank you for coming to Michigan. I was there at your town hall meeting last night, so appreciate that. Your time and ministry there. Question I have that I didn't get to ask last night is I have for one of my sons from a grandparent, they purchased a Series EE United States Savings Bond in 1999, and I'm wondering if this is a good time to cash that in and then invest it somewhere else.
Yeah, I think it probably is, Deborah. So how old's your son now?
He's 15.
And so here's the thing. It is fully matured right now, or at least as far as the face value goes. So EE bonds earn interest, I should say. So in a certain period of time, so let's say it doesn't matter what it is because they're all the same. So let's say it's a $100 savings bond. They paid $50 for it. And at a certain period of time, the value of it becomes $100. Well, you've reached that point where the value is $100 and then some. So it's going to be, I'm making a number up here, but you cash it in, and it's going to be $110.12 or something. It's going to be more than that. So they continue to earn interest for 30 years from the day they were purchased. But right now, the interest is very low. I like the idea of cashing it in now. When did your son turn 15?
He's going to be 16 in September.
Okay, so I would cash it in now. At 15, he'll be able to use his own tax rate, which is practically nothing, when he cashes it in. So it's a great time to do it. And then I would consider reinvesting it in maybe something a little bit more aggressive that he can save for a period of time, maybe something like a Timothy fund. But I would cash it in, and then maybe we can talk again about what he might do with that based on what the economy looks like at that time. Thank you, Deborah. You're listening to Financial Issues. I'm Dan Celia. We're doing the best we can. We're trying to help you be the best steward you can be with all that God's given you.
American Family Radio.
AFR Talk.